I gotta invert this. Okay. I'm posting to the wrong place. I can hear. What's up, everybody? I can't believe what I just did. I wasted a solid 5 minutes doing absolutely nothing. Hold on. You can see, I told you they grow on you, right? The sounds of the game, Vin. I can't function without them. The sounds of the game, right? And we really haven't had any aggressive program selling in quite a while. I came in a little unprepared here, so I was trying to gather some stuff, but I screwed that up. Growth outlook to the year to flat up to low single digits. Prior was up low single digits. I'll pull these things. Shut up already. I'll pull these things as we're talking here. All right, let's start anyway. What was I looking for? Oh, that's what I was looking for. Okay, I need this and this. Okay. All right. We're all set. Vin, you can hear me and see the screen okay? Anybody else out there, give me a mic check, video check, so I make sure I'm not. What was that noise? Talking to myself?
Okay. Yep, Jay, we can hear you.
Oh, we're good? We're good. All right.
Yep. All good.
Thank you. All right, we'll get rolling here. Netflix, it looks like you got a little bit of weakness off some guidance. Doesn't look like anything too traumatic. All right, let's dive into things here. I got to refresh this. I think. Let's see. Yeah. Thanks, Vin. All right. So what we've had of recent. I mean, well, let's rewind before we even talk about today. Um, a big, the big issue behind the market melt up, if you will, over the last several weeks now has been participation, right? A lot of people complaining about the participation, perma bears talking about the participation. Um, so even though you had the major indexes continue to push higher, being the SPX and the NASDAQ, the only two indexes anybody seems to care about, you had a lot of stuff just not get involved, right? That was up until probably a week ago, in where I think rate cuts finally, after a really soft CPI reading, rate cuts pretty much were getting priced in to that September meeting, right? And players took that as a green light to start buying some of the more economically sensitive type names, small caps, mid caps. Again, a lot of the stuff that really hasn't been involved in this market. And the logic being is that we've been part of an economy that, even though has been stable, has lacked growth. Um, Outside of AI and pockets of tech, only the best of the best companies out there have been able to grow their profits, right? So you've had this quality basket, in a sense. We've talked about it ad nauseum on this webinar, that has been crowded for quite some time now, right? And has never really seen any consolidation or even a healthy correction. Every little sell off in that quality bucket would get just bought up immediately. Okay. And for those of you who don't understand what may be in that quality basket, think of it from semis like an NVIDIA AI names, right? Mega cap AI names to a Costco. Okay. It's not necessarily just strictly AI in tech. We've seen the market broaden out, but it's been, the best of the best companies out there, and pretty much the biggest of the biggest too, besides the best market cap wise. Okay. So when rate cuts off that source CPI start to get priced in, uh, people took it as a green light to start buying some of the other things that have been lagging. Okay. You've seen quite the rip over the past week. I mean, you pull up a chart of the small caps index wise, and you could see over the past few days here, rip. The industrials, incredible rip, right? Um, some of the individual names out there, from a URI, which is a go-to name when you're looking to buy industrials, or a Caterpillar, Deere, any of those names. Everything that's lagged has really done well over the last week. Now, what's interesting about that, and if you remember, we had this conversation, is that a lot of bulls that, or even bears that didn't believe in this bull market, in a sense, right? Since it's been going on, they've been waiting for this, right? The reason they really haven't been aggressive or participating in this bull market as much as they should is because it's only really been a bull market in certain select spots of the market. Okay. The RSP, we look at plenty of times, right? We look at this more than SPX on this webinar, because that's the true overall market the overall universe of stocks out there. Has been bullish, no doubt, okay, but hasn't been in melt-up mode, has actually been consolidating over the past quarter, and just recently caught fire, right? So, I mean, that's the main takeaway here over the past week, and as that's happened, okay, we started to see that crowded quality momentum bucket that people have been hiding in for so long being used as a source of funds, right? So funds out there that have been buying the semiconductors and solely the semiconductors over the last year, they sell or take profits on some of that semi exposure, and they go and buy some industrials, right? So you've had this now unwind and outperformance in the other direction for a short period of time here. Okay. And that's been the takeaway. That's been the takeaway, that it hasn't been really anything of a true sell-off up until today. Okay. It's been strictly rotation. No matter, and it doesn't matter what the indexes, the indexes you choose to look at are doing. Okay, because it's very misleading. I mean, we talked about a major brokerage firm out there. I forgot who it was. Stiefel, one of those guys, dropped coverage on the S&P 500. They're not issuing any forecast or price targets on the S&P 500 for the time being because they think it's not a true depiction on the overall market. So there's no, all you got to do is handicap a handful of stocks, right? 4 or 5 names to try to get a gauge on what the S&P is doing, right? Doesn't give you a true depiction on the whole universe of stocks out there. So we've had this rotation, and it's really difficult to really get a gauge on whatever index you may be interested in, how that may play out, right? Depending on how aggressive that rotation is from those quality tech, AI, semiconductor names and groups into the other stuff, ultimately is going to determine how some of these indexes do, right? If they sell like they've been doing the past couple of days, these crowded names more aggressively, and they're not buying the buy side of rotation as aggressive, you're going to get days like today, right? If while they're selling the semis and some of these tech names and AI names, they continue to buy the banks and all this stuff, you'll get pockets of weakness. Like we've been seeing programs selling in the semis and some of these spots, but the market's held up by the buying in the industrials and the small caps and stuff like that. Like we've seen plenty of days now, not plenty, but of recent, where the industrials are green, the small caps are green, the equal weight S&P 500 is green, but the NASDAQ seeing some selling. Okay. So if we see a continuation of that, I think the most important thing is it's going to be really, really difficult to get a read on the indexes you may like to trade, right? So that's why what we've been talking more about is on a name-by-name, case-by-case basis. Like that's where the opportunities are, right? Where is the money going? Where is that hot money, the new hot money going? Where are they rotating into, right? So that's been our focal point in the steam room. We've been, at least that's what I've been doing, and a lot of people I talk to, we've been trying to pay attention on where that money may be rotating into, more so than what the overall market will do. Will it continue to melt up? Is there a correction? That sort of thing, right? I think where we were coming into today, we got to a point where now that some of the rotational stuff really had quite the rip over the last few days, you had a lot of different groups now a bit extended over a short period of time, right? Why do I say things like that? Because if we look at a few different sentiment positioning indicators across different time frames and stuff like that, some of our shorter term indicators were overheated in a sense, right? This is one we like to look at. This is the short term composite indicator. Again, it's short term. I would think of swing trade over the course of multiple weeks and months, right? I know the definition of short term for some of you weekly players is days, but I would think more so weeks and months. That sort of time frame, no longer than 2-3 months. And when we get up into that 70, 80 area, there's usually a higher probability of some consolidation or a nice little washout or rinse. Right? 70, you want to be careful. That's probably where you want to start looking if you're in options, rolling positions, taking profit on equity positions, putting on some protection. If you're concerned about some short-term selling, and if we do, if we ever got to the 80 area, that really raises the probability of something like that over even a shorter time horizon. Usually shows up pretty quickly. Okay, so we started seeing things like that, right? So a wash didn't have to come today or the start of a little breather, but if it didn't come today, we probably were going to see it at some point within the next week or so, okay? And I think that's what today's price action was. We started to even see some of the stuff that's been already correcting, right? So as this rotation's been taking place, some of the stuff they've been coming out of a little bit earlier than some of the rest already is trying to find short-term bottoms. Like a lot of that stuff bounced and went green today after multiple days of weakness. So we're already seeing, some signs of even a tactical bottom in a lot of different names. Okay. That's a good segue, I think, into everything else, right? Because short term is short term. On the big picture front and stuff we look at usually on this webinar, again, there's anything major going on, right? We talked about how the credit market signals weren't really confirming a melt up. The credit default swaps kind of been acting better now that there's been more participation. It's been a healthier rally because more stuff is involved. The breadth, the internals of the market have been more bullish up until today. So credit default swaps, you could see, right? We're just trying to break out of this local high here where the market's already been melting up. All right, so if you remember the last few webinars we've been discussing how this wasn't necessarily confirming the continuation of the melt up in the market. You can see it even more so on credit spreads as opposed to swaps. Okay, these are credit spreads here. And you can see these have stalled completely, right? Almost bending in a sense, while the equity market continued to move on, right? And even some people have been pointing out that some of the lower grade credit, even worse, on the lower credit side, has been deteriorating. So the credit markets, as the major indexes were melting up, the credit market signals weren't confirming a risk on melt up. Okay, does that mean you short the market right then and there? No, this has been going on for 2 weeks, 3 weeks, right? We've been talking about it. What it's telling us is that it's not a full-fledged risk-on bull market, okay? The current market. You got to look for opportunities in individual names and pockets and rotation. You can't just buy any stock at any time and think because we are in, quote, melt-up mode, because everybody in Twitter's calling it that you can buy anything and make money, right? So that's what I think it signals more than anything else, first and foremost. The other thing it does indicate a lot of times is that usually it resolves in some sort of rinse, okay? Not Armageddon, not the apocalypse, but some sort of quick rinse over the short term. You get that little reset, and that's kind of what we're seeing here. So that's been the big picture signals. Also, you guys know I like to look at just exhaustion signals, right? In general, if you look at like just even the indexes, ES, right? Same thing. At a spot where a higher probability where the market starts to show bulls getting tired on the upside. You can see it there, the 9, the sell. It's happened before, right? Nothing tragic, just a little bit of a breather. Sometimes it can result in more selling, but again, it's just a reminder of where we are, and it's probably not the most prudent thing to just put on new risk into exhaustion signals, right? So we started to see it on ES, on the semis, on a lot of these things. What is that concoction here? Let me get that out of here. We started to see it across some of the hot groups, right? The hot groups that have been out there. And now, over the past week, we even started to see some of these exhaustion signals on some of the rotation spots that haven't been participating. Right? So you had some short-term heat out there. Okay. As far as the other big picture signals out there, we look at Sharpies, as we refer to them, commercial hedgers in the futures market. They started to put on some hedging, and from week to week, they've unwound that. Last week, they unwound some of it. For me, this is no major takeaway here. And the reason why is you get into melt up mode, okay? What they should be doing is they should be aggressively putting on hedges into a melt up. Okay, that's what they normally do, not what they should be. That's what they normally do. All right. What we've seen more of is we've seen them remain unhedged up until recently, about a month or two ago, where they took off that long exposure and started to put on some hedging. Okay, and you can see it's been bouncing around here a little bit. The key takeaway for me is that they haven't been aggressively adding hedges as the market continues higher. Okay, kind of like this. That would signal caution, right? Because that they're usually taking the other side of the fence on the positioning front, meaning everybody's getting aggressive on the long side, everybody's already long, and Sharpies usually would be maxed hedge in a sense. Okay. So again, I wouldn't throw this in the bullish category anymore. I would just put it in the neutral category more than anything else. Sharpies. And then the last one, and I think this has been the most important positioning reading we've been looking at. This is hedge funds in individual names, right? And we've talked ad nauseum, week after week, in reference to the hedge fund positioning out there in individual names, okay, has been really bearish. They've been really cautious, okay? The only thing they have been buying when they do get long is mega cap tech and AI related semis, okay? That's where they've been hiding out, right? So what we're seeing right now, okay, what we've seen over the past week is the ultimate pain trade for that crowd. Okay? The ultimate pain trade is not a market that goes into a tailspin. Okay? Because they have some long exposure. Okay? And they have some aggressive short exposure. The ultimate pain trade for this crowd is the stuff that they've been crowding into and hiding in for quite a while now, sees rotation out of, and they're going into the stuff that they are not in and aggressively short in some areas. Okay? So that's why this has been the ultimate pain trade. And we started to see it now, right? I don't know if you guys saw this update of recent. I don't know if it was last week or if I even had a webinar last week, but they had one of their net largest short exposures in individual names that they've had forever, okay? And you could see this aggressive cover here as they got squeezed, okay, because of that pain. So they're not all in long, as we say, okay? So it's not a signal of a top or the end of a bull market per se, right? If they were all in long with some of the other sentiment we're seeing out there, you really can make the case that everybody's already in and there's not much buying left, okay? you can't take that away from this. But if this market wanted to shake and rattle the cage a little bit, okay, they can. Now it would make sense, right? Now we could see that happening. It was really difficult to see that happening with with hedge funds sitting on their largest short exposure in individual names, right? Is it possible? Of course it is. Okay, the few times the crowds and the extremists make money when their crowd is when you get these exogenous events, right? Like 2008, a lot of people were shorting. There were things going out of business all over the place, even the firms they were shorting through. But if you were short in that 2008 debacle, and a lot of people were, you made some money. Okay, but that's the rare occasion. The norm is when the crowd is one-sided and at an extreme, usually the market gods like to shake them out before they make a move in that direction. Okay? That, I think, is the takeaway from this right now. Right? Do we have to see a pullback here? No. But now it would make a lot more sense than when we were lingering down here. Right? And it's not crystal ball crap. There's logical reasoning behind it, okay? If the market started to sell while they were aggressively short, okay, especially the stuff that they've been shorting, what they're likely to do, they're likely to cover those shorts into weakness, right? Or even buy some stuff into weakness because they're already short. They'd make some money, cover, and probably look to buy some stuff off a dip outside of an exogenous event, right? Okay, so that's usually what happens when they're already short. If they're all in long and a market starts to roll over, right? What they need to do is unwind all that long exposure into a market that's already selling off. And that obviously can snowball and add to that downside pressure and momentum. So there's logic behind why we think there could be certain scenarios that play out. It's not some magical indicator. It's actual positioning, real positioning out there. Okay? So again, that's the takeaway there, right? I think what's interesting overall is that, and again, my take, right, and this is just my take. You take what you want with it with a grain of salt for all I care, but a lot of you know my style of trade and how I look at the market at certain times. We're just getting into earnings season here, right? We're just getting started. It is the perfect time, in my opinion, if this market wants to digest or even pull back here. Okay, we had seasonally, you had the best time of probably the year, the first half of July. I think especially in an election year is up 9 out of 9 times, the last 9 times. Okay. The second half of July is a bit more bumpy, right? Then also we get into the late summer, September period, where that is the worst time of the year. Okay. So that being said, it wouldn't shock me for the market to front run that seasonality after a move we just had. Okay, if we do see a bit of a pullback or some consolidation throughout, let's say the rest of this month into August, if they front run that late August, September bearish seasonality, I think that could be a good thing. Because while everybody's looking for that sell-off to come in September, there's a chance we already got it, right? And can kind of catch everybody by surprise. But the point I'm making is whatever's going to happen is going to happen. I'm not even going to try to predict it. All I know is we are in earnings season. I have no edge at all from the flow right now. Zero. Okay? A lot of this stuff, no matter what you were looking at, if you were trading options on the mega caps or you were trading some of the cheaper price stocks like myself, everything had a really, really nice move. Okay, everything did, and could use a rest. Okay, and I think it's a perfect time right now over the next couple weeks till we get through that heart of earnings season to allow the market to do its thing and reevaluate once we get through some of those larger earnings, bigger earnings. Because I think the wild card here is earnings, right? And it doesn't have to be that clean cut, meaning that you can see randomness to the earnings season. Like a Netflix, whatever it's doing, may do well or may do poorly. And Nvidia may do well. That's later. Apple may do better, right? Google may not do as well. Meta may do okay. And instead of a clean cut direction out of that camp, you may just get things going in marching to the beat of their own drum in a sense. That creates a problem if you have a bias and you're trying to pick a direction here. So I think you want to see the reaction. Forget about the numbers. It doesn't matter what the earnings are like, especially over the short term. You want to see the reaction to a lot of these earnings, and you're going to get some decent information out of that stuff, right? I'll give an example. If the stuff they're rotating into, if they sell off earnings for whatever reason, and you see them being bought up aggressively into that weakness, that's probably a pretty healthy sign that there's still decent demand in this rotational trade that's out there, right? Could have some legs. I mean, the last time we've seen any sort of real rotation like we're seeing now, and I wouldn't even say it was rotation, where participation, I should call it, was the end of last year, right? So let me pull up IWM. You can see it better. End of last year into the beginning of, 2024. I'm going too far back, right? Right here. Here it is. So this is IWM. Right? You had a leg. IWM looked like garbage back then too. You could see, right, chopping around for ages, and then just put together a really nice squeeze for multiple weeks there. Ooh. Right, and even though this wasn't as strong per se, it wasn't distribution either. It's still in an uptrend and still was bullish, right? So there's still opportunities. So it could linger, right? It could linger. And, some of this overcrowded stuff could remain in consolidation and digest for a longer period of time. It's very possible. It would make a ton of sense if it did. Okay. There will be trading opportunities within that, but you got to understand that there's a legit risk that some of the hot stuff could be more range bound than anything else over the next few weeks here or months. That stuff is extremely difficult for me to try to figure out. And that's where the sweeper activity does all the work for me, right? That's where I need to see where the call buying, the aggressive call buying, where is it going? Where is it showing up? And that's going to tell me where the momentum is, right? Right now, that information we're not getting from the flow because of earnings season and monthly OPEX this week. So the moral of the story is I think it's a good couple weeks here to stay extremely nimble. I'm not really looking to take at all any overnight risk. I've trimmed my long exposure where I wanted to trim. I'm totally content there. And I'm solely trading on intraday time frame until we get through that final big week of earnings, which is not next week, the week after. And then we're going to have some post-earnings activity to kind of determine where we're at. Right? I think that'll help us. It'll help clear up the picture right now because there's several different scenarios that can come out of this. You could get, we could get a bounce here over the short term once we get, things get a little too sold off on a short term basis. You get a nice tradable bounce. Then it's possible we could have lower to go, right? I mean, we're overdue for a correction. It's not impossible here. There's nothing in a way of a correction here, right? There's nothing on the positioning side of things that's in the way that will prevent a correction here. So that's certainly a possibility, right? We could just get rotation and chop some more of the same, where certain indexes are up on a particular day, others are down, and then vice versa. You kind of get that rotation back when that gets a little too stretched for a shorter period of time. We could do that for the next month. All right. So there's too many different scenarios to say just I'm bullish or bearish. You could say all you want. That doesn't mean you're going to make money in what you're playing. That's the problem. It's not as easy as just being bullish or bearish. Yeah, and the rate cuts are, that's a good point, right? Definitely off to September. Well, that's September, right? So we got some time till then. But that's a good point, CEO. You could get that rotation back into the mega caps after you get some consolidation. CEO's pointing out that if we do get a rate cut in September, you kind of had this rotation ahead of that, and then you get rotation back into the mega caps after, right? Almost like a sell the news type of thing. I certainly could see that scenario. And, who knows what enters the mix? I mean, Trump almost just caught a bullet in his head, caught his ear. You never know. And see, that's the thing, right? You never can predict that stuff. But I'm telling you guys, I've been in the game a long time, okay? Shit like that has a tendency to show up in that late August, September, October period in that window. Okay? And not only does it show up, it shows up and the market really cares about it. There are other times the market doesn't care. There'll be like a mini terror event and the market will sell off and they'll turn it green by the end of the day. But if it happens during that bearish seasonal effect, for a variety of reasons, because flows too are a lot more not as bullish. Okay, you had flows that were extremely bullish June, July. Now you start to lose that effect as well. Okay, so it's not just some made up fallacy or story, or there are reasons why it's the weakest time of the year. So you never know, right? You never know where a shock may pop out of, and at the wrong time of year, you get something like that. So there are a lot of things to think about. I just think right now, and this is me, right? Some of you are not even in the steam room, so it doesn't even apply to you. You look at other shit. But for me, without the sweeper activity, I'm blind. Okay, I'm blind. Like I could try to handicap it myself, but I know that it's useless for me, right? At best, I'll be chasing break even, trying to handicap it on my own and betting accordingly. Okay, I come to that conclusion a long time ago. So without sweeper activity kind of guiding me to where the hot money may be going, may be heading, I'm blind for the next couple of weeks, and that's where I like to sit on my hands and mess around intraday, keep it tight. Not going to get really hurt. It'll keep me involved, keep me entertained, that sort of thing. Right? So that's where I'm at right now. And I think it sets up perfectly. I think it's a perfect setup for that after what we've just seen, right? Because again, we had a market where it was solely $1,000 stocks leading the way. And if you're not buying calls on those $1,000 stocks, you're not participating in that where the bulk of the bullish price action is. Right? So and I'm telling you from my experience, so you're still in a grind, right? There are pockets that are better than others where some of the other stuff participates and you get some momentum and you make some money. But more so, it's been a grind for those of us who don't play those $1,000 names. Recently, that hasn't been the case. The last month and a half, there's been, I think, a little bit for everybody out there. A little bit for everybody out there. So it's a good time to lock in some of those gains, chill out, and just wait for a cleaner look. A cleaner look. All right? What do you guys think? Anybody have, and I hate doing this with you guys. I know it annoys you more than me. We have a delay here. Okay? So I'm going to try to, if I do ask questions, give it enough time to you guys hear it and get back to me. But if you guys have any feedback, any questions on it, on what was discussed here so far? Tobias is saying these past few days were just what the psyche needed. Nice to be reminded. Yeah, no doubt, Tobias. No doubt. No doubt. 100%. Right? When you don't get days like today, I think you need to be more concerned. You need to get worried. You need to be aware of that even more so. Okay? When money, there'll be periods and pockets of easy money. Right? There are just certain times where the market, and you need to be around for that, where the market is giving money away on the bull or bear side. Okay? But I think the biggest problem with that is a lot of traders, especially newer traders, think that will last and be around forever. And that's obviously not the case, right? At the least, it becomes more difficult, even if it remains bullish. So, you've had just, again, you could have thrown a dart at any AI semi, okay? Throw out your rules and your discipline and everything you've learned through trading, and made money, right? Chase any extended move, everything. So you go through a period, okay, that there's a reality check, right? Kind of to Tobias' point, where it keeps you in your place. So even if you get bit in the rear end by it, it's a reminder like, listen, pal, wake up, okay? These are not, you can't make it a habit of doing this because you're going to end up in bad shape. All right, but we've seen already that easy money, that where retail, financial Twitter just assumed they can buy anything because they see the NASDAQ melting up and they think anything AI is just going straight up. We've seen some real pain in some of these things, right? It's AMD a few times now. A lot of them. So they get tougher, and that's just the way it goes, right? That's just the way it goes. SMCI, right? Like after a move like this, the first little pullback, everybody's expecting another move like this, right? The first pullback, okay, buy that dip. You got to buy that dip because you're getting another parabolic run that's coming. But more than not, that doesn't happen. You get this. All right? So totally normal. And I think what hasn't been normal, and we've discussed this, is there are names out there that really haven't done this, have had incredible moves, and haven't gone through something like this yet. You know, so but we're starting to see more and more of them. Remember, like kind of this energy utility power play, there's VST, where our jaws were dropping because this the move was just insanity, right? So I remember talking on, it was either a member only webinar or a Thursday webinar, that you get this and automatically, because you're looking at this now, this happened already. This is old news. You understand? This is not telling you anything about what's going to go on here in the future. But traders have a tendency to look backwards and assume you're going to see a continuation of that or more of that, right? And even though there may be tactical trades at certain spots within here where you're buying weakness and selling a rip that follows, if you're buying holding for this again, more than not, you're going to lose all your money, right? And now, this has rolled over. And, I think this is kind of my problem with names that run like this. I don't like where do you pick a spot here? I have no idea. I have no idea. I know Fibonacci levels people look at 50% corrections and this and that. I don't use any of that stuff. But once this happens, it's kind of, I wash my hands with it. The egg hatched, I'm done. And, I'm looking potentially for the next VST, right? Another candidate that could be similar to a VST. And it could be a 16th of what VST has done, and you still could make a good amount of money. But I things like this, like, I don't know what happens from here, This can go into kind of what we saw happen with like an SMCI for a lengthy period of time. I think that would be the most bullish case. And then you could get, some sort of uptrend to new highs again. But anyway, you see like names, big names too. Look at this monstrosity. Huh? And listen, I love Costco. I think Costco is one of the best names if you're a longer term player in this game. Whenever it goes into lengthy consolidation off a pullback, that sort of thing, you kind of want a dollar cost average into, right? It's great name. Fundamentally, there's nothing wrong. No, you can't. There's not a knock on it. But even Costco, you get this after big moves, and it's totally normal. Totally normal. This really hasn't, like, you had this little here, which set up another ridiculous rip. So, again, I have no clue here, right? I would never buy a Costco up here, never, right? But I have no idea what it does here. I have no idea. And in regards to the flow, for those of you in the steam room, or if you want to know, like, my impression of the flow in names like this, if I'm looking for action, right? For position or investment purposes, I'm looking for action here. Okay? That's where I'm looking for sweepers to tip me off on a move coming in Costco. Okay? You get a nice healthy little push higher, and then you get, a little retracement, right? And you miss that initial move. You want to look and see if they support it there. But once it does this, you don't know what players are putting on new risk all the way up here, what's rolling, what's stock replacement, you got so many different things going on. So if anything, it just becomes a quick trade type thing. But generally, I want, the edge of the flows to tip me off before this happens, not after it happens. And you had a lot of names that look like this, right? You had a lot of names look like this. So It's going to be interesting to see how the next couple of months shake out. Next 2-3 months, especially with this AI theme. Especially with this AI theme, it's going to be really, really interesting. Maybe we start to see new names. There's enough candidates out there, guys. It's not an excuse now that the candidates aren't out there. Okay, it's a matter, in my opinion, what it's a matter of is, do the aggressive professionals out there, right, or do the professionals out there, are they excited enough about fundamentals starting to turn growth wise that they get aggressive in the other stuff? That's been the problem. Okay, that's been the problem. That the economy has been stable, right? Considering we were looking for a recession all this time, but the growth has benefited only the biggest and the best. Especially size-wise, other places have had issues. We talked about like how fundamentals mattered in this bull market, a lot more so than COVID. Right? Every stock that looks like this or looks like this, they've all been profitable companies with strong growth. All of them. All of them. You think back off the COVID lows, and that was a different type of bull market. That was full-fledged risk-on, Fed throw in the kitchen sink QE bull market off of COVID. But you remember with that, you had give me a sexy story and we'll buy the living piss out of it, right? Fundamentals. You were made fun of if you talked about fundamentals, right? You realize that? Now everybody talks about fundamentals. And I got news for you. When this bubble pops, right? When this bubble pierces, that's, mark my words, that's what happened in 2000. The fundamentals, that's what's going to bury everybody who holds the bag. Because what they're going to say on the way down, nothing's changed fundamentally. This stock's still trading at 30 times forward earnings or 20 times forward earnings. But then 2 months go by, 3 months go by, and then they're going to say, all right, now it's trading at 35 times forward earnings, but that's still okay. And then 2 months, the stock goes lower. You understand? The price action comes before the fundamentals turn. So everybody who's looking at the current earnings and the current growth are good, to think that lasts forever. It never lasts forever. Never. And that's what had people hold the tech bubble bag off of 2000 in all those quality tech names. So I'm not saying it has to happen now. I'm saying when the end comes, you're going to see people are going to use fundamentals as an excuse to hold the bag. Always happens. Should we have taken those IWM 208 sweeps at the market open last Thursday? Vin, I can't remember this morning, let alone last Thursday. IWM, I remember, we've been seeing a lot of IWM flow. But I guess you're talking about early in the rip. There was some decent buying, huh? Yeah, you see how it sneaks up on you, and because this IWM, like people were looking for this move for a bit now, right? Basically all year, and you see it's pretty much always been about rate cuts, right? You had the Powell and Yellen pivot off the October lows, and that helped IWM. But then as inflation was a little sticky and rate cuts got pushed out, IWM got stuck. And then now you get that soft CPI and rate cuts get fully priced in September, and IWM catches a bid here. So they really feel like rate cuts, for whatever reason, are important to this IWM trade. Cisco and QCOM holding bag for those. I mean, those were two big ones. Those were two big ones. You know, people don't realize like how big Cisco was. That was the blue chip of blue chips. But what Intel, right? You had a lot of big names. Everybody thinks about the internet names that went parabolic and then crashed, but you had a lot of blue chip names that came down with all that tech wise and went dead for years. And I think that was torture. How would I create a scalping correlation strategy? I don't know what you mean by that. Correlation to what? That's something I think you would need a algo to do. And you're not talking to the right guy when it comes to that. I think IWM move in October 20th, December 20th was because they rate cuts were coming quickly. Yeah, that was off the Powell pivot. Remember when Powell pivoted? And then they priced them out, and then now rate cuts back into the conversation. Because that CPI number was, I mean, if you were looking, right, for rate cuts, you couldn't draw it up any better. Correlation to the underlying index? I don't know what you mean. You're talking about names? I don't know what you mean. A scalping system where names are correlated to an index? This let me tell you, this is a tough market as far as like the randomness to it. It's really tough because these correlations, they work until they don't. You guys remember higher rates were supposed to bury tech and all that stuff. It works until there's a theme and the theme gets played out and then the market moves on and goes to something else. So, but the correlation here now is, I think correlation's at the lowest it's been since 2000. 2-minute ABC pattern shorting only if the QQQ simultaneously falling in a downtrend. 2-minute ABC pattern shorting only if the QQQ is simultaneously falling in a downtrend. Simultaneously to what? That's what I'm asking. You talking about names? Yeah, it's all games. And too, Bri, anytime everybody's talking about the same thing, right? If everyone's looking in the same direction at the same thing, that's not going to last, right? It's old news when everybody's doing that. It's old news. Yeah, and listen, messiness doesn't have to be a bad thing. You know what I mean? Messiness could be a good thing, and I think that's where the sloppiness behind some of this mega cap rally could hurt you if you get in the habit of treating the market the same way as the move in a Costco or an Nvidia, or any of the semis. But a messy market is not always a bad thing. You get entries, right? And your exits matter. Like, we've gone through a period in certain names where it didn't matter, right? People are all looking at the same names. They always want to buy the same names. And that's all great when there's momentum and the bullish price action we've been seeing in those names. But when that turns into chop, you got to change your game. Otherwise, you're going to give back your money, right? You're going to give back your money. So I think the key here, though, I think the most important thing is to check your bias at the door with this market, right? Keep your eyes open and the ability to react to what you see, right? And again, I'm talking through what I look at, but plain and simple, like it's pretty easy for me. If I see good looking, aggressive sweeper buying in new stuff and fresh setups, I don't care about anything else. I'm not going to lie to you. I really, in this market, I really don't care about anything else. Because I tell you the truth, the market, the indexes, what is the market anymore? The SPX is not the market. So when people say, what's the market going to do? That right there, you're starting the conversation off wrong if you're asking, what's the market going to do? Because even if I tell you what the market is going to do, if you don't play the right thing, you're not going to benefit off it. Right? So, to Sahil's point, if it does get messy and dicey, being everything, the election and everything else going on, the move that we've had, you know, if you get small cap or mid cap outperformance, there can be under the hood names where there's a full fledged bull market going on that no one's talking about. And if you play those type of names, that is the best case scenario for you. Better than a melt up. You understand what I mean? So trying to handicap what SPX is going to do, unless you just strictly trade SPX and that's all you do, I think is the worst thing you can be doing right now. God honest truth. God honest truth. That's my opinion anyway. Right? I don't want to have a hunch. Not that, again, not that my gut feeling or hunches is worth a shit anyway. You know? But I want a clean slate. Right? That was kind of my goal getting into the latter stages weeks of this month, July. I want kind of a clean slate, right? Content, okay with what I'm holding at the current time, and just strictly looking for what I exactly just said. You know? Good looking buying in new names. If I see that, I'm gonna play. I don't care what it's in, I'm gonna play. If I don't see it, I'm not gonna play. I don't care what the market may be looking like on that particular day. I mean, that's just case closed for me. You know, and it's kind of like what the recent trade I've had with these miners, and it's miners in general, right? Bitcoin wasn't doing anything. Bitcoin looked like shit, but they were aggressively buying some of these spec, what we thought Bitcoin miners at beautiful risk reward spots. You know, I'm not going to waste my time trying to handicap what the market is doing. And thank God I didn't try to handicap what Bitcoin is doing, because I would have missed the boat completely. Because it wasn't even a play on Bitcoin. It wasn't even a play on Bitcoin. You know what I mean? So that's the point I'm trying to make. What simple strategy ABC pattern? Yeah. Alumni. Again, I'm not trying to be rude in any way. That you're not. It's not really my cup of tea. You're not talking. You know what I mean? I'm just being honest. It's not my game. Yeah, that's not the way I play the game. Again, I'm not saying your way is wrong, or you know what I mean. You're talking to the wrong guy. That's all I'm saying. You know? I'm not going to pretend like I could give you any solid advice in that camp. Yeah, fundamentals. You're right. Fundamentals shouldn't matter if you're trading over a shorter time horizon, but in the market we've been in, okay, the names that have seen follow through upside are the names where that had that growth on the fundamental side. Okay, what I mean by that, you have buying or short hedging in short squeeze names, right? And then you have new buying, institutional buying, positioning in names where they're actually betting on the company itself because they're profitable and they got explosive growth rates. Okay. After that initial move, after that initial upside, okay, the majority of names that have moved beyond that initial move into uptrends, fundamentals matter in this environment. Okay. Again, off the COVID lows, meant nothing, period. So if you're buying GameStop, or if you're buying AMC, or if you're buying Lucid, okay, the stock may go up for that week on a short squeeze. Okay, but in all likelihood, again, in the environment we've been in, they sell those stocks right back after that momentum dries up, right? Where the names that were profitable with growth, the buying continued and they have unbelievable uptrends. That's where they matter. Yeah, Alumma, that's what I'm saying. I don't do that. You know what I mean? I don't trade that much. You know, I'm fairly like I'm a lot more selective than that. So, 30-second charts. I can't even my head will spin. You know? I can't trade names like Nvidia and shit like that because my head spins. 30-second charts? You lost your mind? I wouldn't be in the game as long as I am if I was trading off 30-second charts. I'll tell you that much. I have a brain aneurysm. Taking notes, being patient, not trying to follow her. No doubt, Tobias. No doubt. Again, just logically, in this game, right? We were talking about it on the recent Flow Trader course. You don't have an edge when you're looking at the same stock, the same price action, the same information that everybody is looking at and trading it. Okay? You may think you have an edge. Okay? You may feel like you have an edge off levels or price action, whatever the case. Okay? But realistically, if everybody's trading the same stock, and that's what you see in a lot of these names, just look at the volume. You do not have an edge. Now, that doesn't mean you're not going to have a profitable trade on this particular trade or the next trade. Okay? But you're not going to find a consistent edge from that information. Plain and simple. For logical reasons. Okay? If everybody's looking at the same shit you're looking at, you can't logically have an edge. How can you have an edge? You see something that somebody else don't? Right? You just can't. And I think a lot of the names out there at this point, some of the best performing names, are in that camp now. Right? Doesn't mean if you're in them, you don't still hold them, right? Especially if you're a longer term player. I'm talking about playing them now, here. everybody's looking at the same stuff. You see Nvidia dip, everybody's looking at that dip and wondering if it's a buying opportunity right now. Everybody. Everybody. Okay? My aunt's godmother's dog is looking at it. Everybody. So you're relying more on the luck and the gambling aspect, and that's fine. But to find consistency over a period of time in this game, like any other game, you need some sort of edge, right? You need something that allows you to see something before others see it. In my opinion. In my opinion. Yeah, Lucci you could definitely talk to about that. I think anyway. I don't know. I don't know if I'll have any, but Lucci's a better person to talk to about that than myself. I'll tell you that much. Lucci's a better person to talk to than myself, but I don't know if he'll be able to help you out much. You know what I mean? Yeah. Again, I'm at the point where I try to keep it as simple as possible, and I don't have the brain capacity to digest too much information. Anybody else have anything to add? Again, usually we've been talking about names because there's been some interesting names to talk about the last few weeks. There really isn't too much to talk about. Okay. Again, there's been some names that have done rather well. But as far as any new candidates here, being that we're going into earnings season, like I give an example. You got a name like this, RKT, which is probably a rate cut play, I should say. Has been seeing some interesting action. They bought January calls. I think was it? Yeah, December calls. I think first, and then they bought some January calls. You have earnings coming up here. So it could be earnings related, August 1st. And you have July expiration this week. So they could be pushing out July positions as well. But that's been some of the better looking flow, I would say. That's caught my eye. RKT, mortgage name. Been fine too. Been looking better. Everything else, again, just things have moved so much. Yeah, I see some of you talking about the miners. Well, you have the Bitcoin proxy plays, okay, that see flow from time to time. They move with Bitcoin. So I'm talking about these guys. Mara, CLSK, Cypher, right? So I played CLSK, I traded it, but other than that, I haven't really played these. They moved recently, especially the Cypher nicely, So again, is it going higher? I really don't know. The stuff, the miners, the energy miners that they played initially, that they first started to buy, that I participated in, they've had big moves now. Now, I don't. They can sit around for a while if they're bullish, right? Like this Wolf, you got a little pullback here. It's still 540. Like here's the entry on it. You know what I mean? From 2 to 6 and change. I mean that's a ridiculous move, right? So I still have some Wolf that I'm holding. I'm good with. I'm not looking to sell anymore. Unless it catches news and rips, I'll probably dump a little bit more. But I'm not looking to sell anymore here. the other one, which one is it? Hut. I still have some. Look at these moves. Like this Hut, in what I left behind the other day, it was up over $11. Are you kidding me? That's it now. I'm not even if they dip here. I'm not buying dips after an $11 move on a $9 stock. I locked in really nice gain that I wanted to lock in. I left some stock behind. I got some cushion to play around with, and I'm leaving what I got now alone. I'm not looking to add to it. The newest one that I bought that I have that I didn't sell because it was one of the more recent ones is this one, the cheaper one, BTBT. So this I just bought here. And, I haven't sold it and I'm still holding it. All the other ones I've trimmed. Irene. This one actually got hit with a short piece from one of those outfits. So this one's been selling a little more than the others. But again, I booked nice profits on this. So whatever I'm holding now, I'm just going to hang in there, on a longer term basis. So these they all look good, but they can consolidate, correct. They can do whatever. The more Bitcoin related stuff moved recently, and the action wasn't as good looking or aggressive in these names. Some more than others. CLSK caught some nice action. Cypher caught some nice action. But Coin, caught some sweeps here and there. MSTR, right, caught a sweep here and there, decent size. But there's always size in that big boy. So, Bitcoin, because I like the action in it. And it's one of the newer ones I bought. You know what I mean? It didn't, it had that initial move, and I'm just giving a longer leash to it now that I book profits everywhere else. So, it's one I just bought it. I sold all the other stuff, and then I bought this when they started buying. They bought the leaps here. So they bought leaps, and I'm going to give it some time. Have a good one, AJ. But they hit leaps pretty aggressively in this BTBT. And this, too, I think is more AI related. I think they even changed the description in the name. Somebody was telling me. Let me see here. Where'd it go? So that's the reason I'm just giving it more of a leash to. Engage in digital asset mining. No, this is not. It was somewhere. Talking about AI. Hut is talking about AI. So they become like AI plays here. Cypher. Yeah, see, like Cypher, I traded. I never really. I don't think I held Cypher overnight. If I did, I sold it the next day. But that was a nice move here recently. The CLSK I traded a couple times to heal. We were talking about. Anytime it gets down here and they like to sweep it, at least I day traded at the least this CLSK. So, cores I never played. I missed the cores. I missed it. I don't know if I told you guys the story. I thought it was a biotech. It caught flow, and I thought it was this, Court. So I thought it was a biotech. And then one of the steam room members, as it's moving, told me, no, it's not biotech. They just turned down a bid from whatchamacallit. I was like, oh, Jesus. And then the flow just exploded in this thing, But again, look, the move is nuts, guys. I think the market spoils you sometimes. Not you, just us in general. This thing was $2, $3. It hit 12 the other day. You know what I mean? We're not talking about an option here. The equity went from 3 to 12 in a month. So, I don't want to start chasing those type of moves. Again, the reason why I liked the Wolf and the Hut and some of the others like the BTDR is because they were the first ones they came after and they lit them up. I had to buy them. There was no reason why I shouldn't play these things. Right? Like you literally had a stock that has been in consolidation doing nothing, tightening up, right? And then all of a sudden, right in here in this circle, they come in and they're not coming in dumping 40 grand, 50 grand into front month calls. They're buying out in time and gobbling this shit up. Like you couldn't draw this up any better for me in what I look for and the type of player I am. You couldn't spot wise everything. You couldn't draw it up. Right? The Hut, same thing. The type of action that was coming in here, look, didn't go anywhere, right? Languishing down here, and they're coming in bombing leaps. They're selling puts. These names would catch action from time to time. They don't catch that type of action, right? They usually play short-term stuff trying to catch a squeeze off Bitcoin. You had institutional buying accumulation in these things. Okay? And when I see single-digit stocks seeing fund institution accumulation and they didn't even move yet, like it doesn't get better than that for me. Like that's the ideal scenario for me. Ideal scenario. Again, we just discussed edge, right? That's my edge. Okay? Now here, okay, there's not much of an edge anymore, right? Oh, I almost knocked the microphone and the coffee over. Up here now, everybody I know is asking me about these names. Everybody. Right? There's not much of an edge anymore. The stock more than doubled, some tripled, quadrupled. So that's my edge. Yeah, you were telling me chatter for the CIFR, and the core has already turned down an offer from CoreWeave, and I think GJT was telling me there's chatter of another offer too. So, but again, this is not new news anymore, but that's why I left. I still own some, because I still like them, but I'm not going to put new money to work up here. So that's what I'm looking for. It doesn't have to be $2 stocks. We talked about some of those post IPO names. You got a few of them that have been looking good, setting up nicely. I'm just waiting for sweeps to tip me off. That's all, right? Like you got this guy here, TE. Oh, look at that. It's even floating higher. It was down here. But, these are like new names. This one we saw a little bit of action in, but nothing really too aggressive. Down here, RBRK. Oh, yeah, you guys keep asking me about that. I still haven't seen any sweeper activity yet in this thing, ALAB. So there are enough candidates out there. And now if you got the small caps and the mid caps come alive, there's a lot of underbelly stuff, right? There's a lot of underbelly stuff. We just haven't been in a market for it. They've been buying the cream of the crop. That's what the institutions have been buying. CDN. Oh yeah, that's a hot name for a while now. Let's see. Yeah, like look at this though. Yeah, like I don't know. Like where you look to buy this thing. I don't know. Right? Like totally bullish scenario can play out like this. Can easily do that again. That would be bullish. That would be bullish. Now again, as far as trading, right? These dips in these type of names are always going to create trading opportunities. If you see sweeper buying off these dips, you're looking for like that snapback trade. There are always trading opportunities. But overall, it just might be more range bound, Yeah, now you got earnings season, right? So you got that's the issue here. Okay? Where you at best you might get caught in chop and you got the risk of earnings. All right, you got a binary event you can't really control. That's why I don't like right now. I just don't like the current setup for the next few weeks. That's the main thing. That's the main thing. But that should no matter what the market does in a few weeks, that should clear up. That should definitely clear up. Yeah. You know what it is too. You think about Sahil, right? This has been bullish for a long time. So anytime these things take profit, you're going to see volume come out of them. Some of the semis, again, I don't want to say they look awful, but they look like they're definitely at least going to be caught up in some consolidation. Maybe you start to see some of the other semis already have been doing well, right? Like Texas Instruments and stuff like that. This one report yet? Yeah, they're usually early. Yeah, see, these have been doing better because these are more rotational, cyclical semis, right? But listen, no matter what, regardless, the selling we're seeing now, even in the hot stuff, you like this. Even if you like those names, you want this. For trading opportunities, that's what you would need to see. You can't buy into a melt up, right? When it's been going on for a bit. You don't know when that rinse is going to come. You don't know when that consolidation is going to come. Now with this, now that they've pricked these things, now at least for trade, you could at least look to trade them even for bounces and stuff. Because they're going to bounce. They're going to be nice sized bounces in those names. So that's what I would be looking if you like to trade those hot names that have been strong. Looking for these type of pulls, you see, sweeper activity start to perk up. But again, you ideally you want to get outside of earnings here. That's the problem. EA, that I guess is a rotation lane, right? Oh my! Well, I thought it was God scared me here. What is that I just hit? I was like, how did that happen? Oh, it looks good. There you go. EA looks really good. Looks really good. Yeah, and this name has been dead money for a long time. Take two, not so good, right? But yeah, EA looks good, Leo. The dog is doing well. I don't know, Patrick. She's they're gonna keep her there. They're gonna try to they're giving her fluids. Her glucose level, something like that, would skyrocket. Um, she's also got like They don't know if it's cancerous, but she's got like a tumor they want to remove. They don't know if that's feeding into it. She's old, you know what I mean? So there are going to be things going left and right here. So I'm hoping for the best. We'll see what happens. What is she, 14 now? I think she's going to turn 14. You know, the first pack, the first 3 dogs of the group were all a little bit older than the rest. So I lost 2 of the 3, and now this one, Daisy, is the last of the 3 amigos that's still alive. The rest of them are all in the age group from like, I would say 4 to 6. Yeah, you know Daisy the snorer, Sahil. The one who snores and blows out your eardrums in the steam room? Yeah, exactly. You know, and that's the thing. I just don't want to see them suffer. You know, they don't deserve to suffer. Every day they're happy, like it's the best day in the world, you know? Like even now, she felt like shit. I go over, talk to her, tail wagging like crazy. She can't even stand up, but she's wagging her tail. You just, that animal, the dogs, they should never suffer. You know? They should never suffer. They don't deserve to suffer. Yep. So that's the only thing. I just wanted to be at peace. And if she happens, you know, she happens to recover and we get another year or so out of her, that's great. But at the same time, you know, I feel selfish because when they get to that age, you know, they can't hear, then they lose their sight. It's awful. It's awful. But thanks for asking anyhow, guys. Thanks for asking. I appreciate it. Yeah, no suffering is the key, T. That's the most important thing, you know? Because like a friend of mine had a dog who, I forgot what age, it was older. They found cancer, right? And he went through the whole processes like chemo and the medication. The dog lived for another year and change, but it was the worst life ever for the dog. The dog was puking, couldn't eat, couldn't walk. It was just miserable, you know? And I don't know. I can't do that. I can't do that to the dog. Like of course I want her around, but I'm not, I almost feel like it's selfish. Yeah, exactly. So she doesn't have to, they don't have to die in pain. You know what I mean? If they die peacefully at an old age, they lived a happy life. These dogs run my house. You kidding me? You talk about spoiled? It's their house. I just happen to sleep in it alongside them. Yeah, it's amazing. It's amazing that again, you know, you guys know I love dogs, but it's unbelievable. They just look to make you. You're 100% right. That's all they care about, right? You're home. You go. You leave the house for 10 seconds. You come back in. They act like they haven't seen you in 6 years. It's amazing. It's amazing. And my dogs, they got separation anxiety. When I leave the house, they go bananas. Like they go crazy. I come back like they haven't seen me in years. But they're the best. I'll tell you, I take dogs over humans these days any day. Any day. I could live with 50 dogs. Any day. The loyalty unmatched. But again, thanks for asking, guys. I appreciate it. All right, everybody. Enjoy the rest of your Thursday. I keep talking about this. I know it gets ridiculous. You guys, these weeks. I mean, how's tomorrow Friday already? All kidding aside, this week is done. How the hell did this week go by so fast this week? Where did Tuesday, Wednesday, and Thursday go? Tomorrow's Friday? Tell you, you get older and it just gets quicker and quicker and quicker. So depressing. So depressing. But on that note, enjoy the rest of your night. Steam Room members, I'll see you mañana at the open.